Good morning, listeners, and welcome to the Trade Talk podcast. Listeners, today rising COVID cases and further regulatory pressure on tech companies in China have pulled down Hong Kong's index. Also, the Fed's meeting on Wednesday, voting will be done on increasing the base interest rate and by how much. This will also bring choppiness to the market. The market will bounce back if the Ukraine crisis de-escalates but could fall further if it worsens. In brief, the market is under a lot of uncertain news flow and this is going to keep the market more and more volatile in the near future. The US stock futures have started erasing early gains, which is increasing the losses for the Singapore Nifty. Singapore Nifty was down some 45 points in the morning, but now it is down more than 95 points. There was a tremendous jump in the market in the last week. The Nifty and Sensex recovered around 1000 points on Nifty and 4000 points on Sensex from the weekly lowest levels, which is healthy for the market. Last Monday, the market opened with gap down and finally after a panic fall, it took support near 15,670, 15,700 levels and rebounded sharply. Among sectors, almost all sectoral indices rebounded sharply from weekly lows, but media, pharma and technology index were the biggest gainers. Nifty Media Index rose nearly 6.75% and Nifty Pharma was up more than 6.25%. Technically, the market made a sharp rebound from the levels of 15,700. It also formed a long bullish candle on weekly chart, which is largely positive. But the main concern is that Nifty is still trading below the 20 days simple moving average and it is remaining below the crucial level of 16,800 on daily charts. We are also of the view that index completed a phase of pullback with the market texture suggesting a strong possibility of range-bound activity in the near future. We are expecting market to trade between the range of 16,400 and 16,800 on the higher side. In case if we see any further more weakness, then the chances of hitting 16,300 would turn bright. But a close below the level of 16,300 will be negative for the market. In that case, the possibilities of hitting 16,000 would turn bright. On the higher side, as we mentioned, 16,800, 16,900 would be major hurdle for the market, and also there is the resistance of 200 days simple moving average. Broadly, we are of the view that markets are going to remain range bound. We need to be more and more stock specific, and for the week and for next few days we need to focus on defensive sectors like technology, pharma, FMCG. Investors have started watching these sectors very closely as the tension between Ukraine and Russia is not ending, and also the pace of interest rate will decide the next course of action. Friends, that's all from my side for the day. With this, I am ending today's morning podcast. Thank you very much for listening in and have a wonderful day to all of you.